Tomorrow is Financial Literacy Month, and if you have questions on how to manage your budget or save money, credit and business consultant Anetra Smalls has answers. I talk one-on-one with her for this edition of Quintin's Close-Ups, and if you haven't already, subscribe to my YouTube channel and like Quintin's Close-Ups on Facebook. Anetra Smalls, welcome to the award-winning Quintin's Close-Ups.
Thank you. Good morning. Good morning. Thank you for having me.
Oh, you're very welcome. I know that you are a credit and business consultant and a transformational coach. And obviously, you approached me about being on Quintin's Close-Ups to give people some advice on, obviously, Financial Literacy Month, which begins tomorrow. As you know, a lot of people want to commit to change. How can they commit to change financially right now?
So right now, I think the biggest thing is what everyone has seen during the pandemic is that they weren't prepared for a financial crisis, personally. So I think the biggest thing with all of the funds that's being given out, the extensions with unemployment, if for anyone that has businesses or anything like that, the biggest thing right now will be to set aside an emergency fund. So I think that would be the biggest thing to prepare for. In minimum, you should at least have $1,000 minimum set aside for an emergency fund. And I think that that's something that will help you. $1,000 won't sustain you, but if you make that your beginning goal to reach that, then it will definitely help in case if there's unexpected expenses that arises.
As a matter of fact, how do you develop and follow a financial plan that will allow many people like myself to examine our attitudes about money?
So the first thing is you have to be honest with yourself, right? You have to not be afraid to dig deep. In other words, look at your bank statements, see where your money is going. So that would definitely be the first step that you would need to take. Then the other step would then be begin to be, okay, once you figure out where your money is going, if you're spending a whole lot of time, buying things that you don't really need, making food purchases and, just some minor things, even some of your subscriptions, you might have Netflix, Hulu, HBO, NBC, like you might be paying for all of these different subscriptions, but then you realize I'm not even using it. So then the first thing would be, hey, we need to cut out some of these subscriptions. Maybe we don't need to eat out 5 days a week. Maybe I need to start packing lunch instead. So it's just about being honest with where you are and then breaking it down. What is your, once you figure out and you cut those expenses, what is it now that you see that you're able to actually save on? And so then start there. But the biggest thing, it automatically starts. And if you're married, it starts the same thing with couples as well. You guys need to sit down, have that conversation. Hey, babe, this is what needs to happen. We need to learn how to save more. But it doesn't begin until you're ready to face whatever it is that you're running from, whatever it is that you're hiding from. So it definitely is a conversation. And then it starts with just looking at your bank statements.
You talk about not running away from things. Let me ask you this. How can people get ready to accept responsibility for their changing financial situation?
So accepting responsibility begins with accepting you and why you're making those decisions, right? So a lot of people, especially like I know me personally, like I've gained weight during the pandemic. Part of it was sitting at home, but then another part of it also was realizing that I was just kind of making food purchases out of boredom. So that was my thing, but somebody else may have spending habits that would be, for other reasons. So you always want to dig deep into why is it that I'm making this purchase? One thing that I do now is that, like, if I go into the store and I see some nice shoes or something that I want to buy, I don't just immediately purchase it, right? So I take a moment and I say, you know what, if it's here when I come back, or if I still feel the same need, if I come back, like let's say if I go on, today's Wednesday. So if I go in the store today, if it's there, and then I'll say, well, if I come back on Saturday and it's, still here, or if I still want the shoes, if I still feel the exact same way, then I'll make the purchase then. So it's about not making impulsive decisions, and then realizing if you are doing that, why is it that I'm making these impulsive decisions when it comes to spending?
Speaking of which, how can we identify at least one benefit to change our money management behavior?
Ask me that again. I'm sorry. Say it again.
Yes, ma'am. How can people actually identify at least one benefit to change their money management behavior?
So one benefit to change your money management behavior, one way to identify it would be to I guess you could say, just like I said, it starts with you, right? So the biggest thing that you want to do is you want to look at how much money you're bringing in every month. That's going to be the biggest thing. So how much money you bringing in every month determines whether you're poor or content in your finances, is to determine how much money am I putting out. So if the amount of money that you're bringing in is equal to what you're putting out, then that's something right there that you could take an examination of, that you can look after, and you can say, you know what, either A, I have to increase the funds that I'm going to bring in, which maybe begins by starting a side business, or then, like I said earlier, I'm going to cut back on some things so that I'm not putting out the exact amount that I'm bringing in. So I'm not living paycheck to paycheck.
And how should we write down these feelings to assess our finances?
So I always say carry a notebook, right? So carry a notebook. It could be a budget planner, but some place where it's going to have space for you to actually write out, and then become aware of your thoughts, right? So part of what you're doing and why you're spending the way that you are spending is simply because of the thoughts that you're allowing to get into you or to come to you, and then you feel like I have to do whatever my thoughts say. But that's not totally the case anyway, because we're in control of that. So a part of it, when you get those thoughts to tell you I have to impulsive spend, or I don't feel good about this, or maybe you feel like money don't go on trees. So instead of saving because for building, you're saving out of fear. And so that definitely plays a significant part into how we're receiving money, or how money is flowing in and out of our lives. So a part of it is just when those thoughts come, you take out your notebook, you write it down, and then you make a decision to say, okay, for every negative thought that you do have, you're going to write and replace it with something good. So it could be something as simple as normally if you go into the grocery store, just this statement alone could be like, you might see something, you might say, well, that's too expensive. Automatically, you're programming yourself. When you say that's too expensive, you're programming yourself to believe that that thing is too expensive. Instead, you can just change that it's too expensive statement to I can afford whatever I want. And then read those things over and over on a daily basis. Read all of the negative stuff one time, because it's there, and then start to reprogram your mind by rereading all of the positive statements that you've written to cancel out the negative ones. And then eventually, like we know, it takes 30 days to form a habit. So if you do that consistently for 30 days, then guess what? You're now programming yourself to feel abundant, to feel prosperous, and then those things will begin to come into your experience.
And a lot of us, growing up around here, had people own us saying, hey, you need to go to school, you need to stay in school and get an education. How do you choose one person to conduct the day-to-day financial tasks in order for us to stay on top of things financially?
So I actually heard that when I was coming up as well. Go to school so you can get a good job, get a good education. But I think now, in the day and age that we're living in right now, we're seeing millennials, even baby boomers, as well as Generation Z. A lot of people are millionaires are being birthed through the digital age. So I think now that traditional way of learning, which is still good because obviously it's great to have that background, it's not. We're realizing that it's not the only way. So what people are doing now, myself as well, is we're turning to online sources. And so we're realizing that self-education definitely can take you further. And so that's one of the things to not, and then it is about changing your way of thinking and not being conformed to the things that you were taught coming up, because you're seeing that what our parents taught us, or in my case, my grandparents, because my mom isn't that old, but what my grandparents kind of taught my mom, or even taught me as well, those were things that were applicable during their age. So they didn't have the internet. Like credit came out in 1950, right? My grandmother was born in 1952. My grandmother was born in 1950. So their understanding in ways of how they viewed things back then was what they passed down to us. So now with me having my own children, because I know better and because the world has advanced through tech, As well, I'm able to explain things to my children a whole lot better according to where I am now. But of course, when they get older and when they, reach my age, there'll be things that they'll have to teach their children as far as advancement goes in the financial industry. And so that's what we have to do. We have to constantly be willing to evolve and change so that we can stay ahead of the trends.
And speaking of which, you just talked about credit, but where can people get a copy of their free credit report?
So a lot of individuals do not know, but you guys are due a free credit report every year. So it's one every year, and you can get it at freecreditreport.com, which is basically a free annual creditreport.com. You can go on there, you can just type it in Google, either or free credit report, and then it'll bring up the website, annualcreditreport.com.
And let's say if you obviously you have, say for instance, I hate to say it, but a bad credit report, how do you clean that up?
So it's nothing to be ashamed of, because I was there, which is what got me on my journey to financial freedom, being denied for loans. So the biggest thing, the options that you guys have obviously is that if you see items that are listed on your credit report that are negative, first what you want to do is you want to make sure that you're disputing them. If they're negative, that means that they don't belong on there, and therefore, according to FCRA law, any items that are on your credit report, whether they be yours or not, if they're reporting inaccurately, if they're negatively and they're reporting inaccurately, meaning the balances could be wrong, the time when you opened your account could be wrong, then those are accounts that you definitely want to make sure that you're disputing to get removed, to get deleted from your report. Now, it doesn't. A lot of people are confused. It does not mean, especially if the account is yours, it doesn't mean that you no longer owe that debt. You still owe that debt. It's just that on your report, when lenders are looking at it, because you've had it deleted because of the inaccurate reporting information, the lenders aren't able to see it. So therefore, it gives you a head start. It gives you another chance at being able to obtain lines of credit, because hopefully when you're getting serious about your finances and you're making these decisions, you've decided that, you know what, I'm making a change. So therefore, you have better spending habits, you have better money management habits, and so you decided to make the change. So you can always do it yourself, and then obviously, if you don't want to do it yourself, I do offer credit repair services. I have a credit repair company as well as other companies that are out there. So you guys do have the option to choose a professional if you feel like you aren't qualified to dispute the items yourself.
How do you understand the cost of credit?
So understanding the cost of credit is understanding interest rates. So right now we see with the housing crisis, well, no, it's not a crisis. It's actually a great thing now. Interest rates are at an all-time low. You have people buying homes with a 2% interest rate, whereas the same people that probably purchase mortgages, let's say they purchased them back right before the recession hit back in 2012, if they had purchased them in 2009 and everything else, they probably bought those same homes with the exact same price, but the interest rate was probably at about 8% or 7%, back then. So that's how you can understand what the cost of credit is. If you go to a dealership and if you have poor credit, you're going to make a purchase on a vehicle, and anything that's going to be above about 8 to 10%. Sometimes I've even seen clients come in and they've had a 23% interest rate on a car loan, 19%. That is the cost of bad credit, because this same vehicle that could be, let's say, example, 2021 vehicle, right? And someone with poor credit going in could get it at a 19% interest rate. But then someone with me, because they do have first time car buyers program that are available, but most of those people have low credit scores, right? And then someone else like me going in with the same, looking to purchase the exact same vehicle, I have a 800 credit score going in to purchase the exact same vehicle. Over the length of my loan, I would probably pay an extra $200. Just saying, for example, I would pay an extra $200. However, the person with bad credit over the length of their loan would probably end up paying an extra $1,000. So that is the cost of bad credit. And understanding the cost of bad credit will always be written in your contract when you see your interest rate. Your interest rate is going to let you know how much you're paying and what the cost of bad credit is.
And let me ask you this. If you were to hit a wall of debt, how do you review that situation?
So if you do hit a wall of debt, because that does happen, there's been a lot of people that have lost their jobs during the pandemic. The biggest thing that you want to do is you want to come up with a plan. Okay, so when you didn't just magically get into debt. You got into debt because you did not have a plan or strategy on how you're going to manage your credit cards, how you're going to manage your bills. So when you hit a wall of debt, it's okay. You know what? Now I need to take a breather, and now I need to create a plan, and I need to decide how am I going to get rid of this debt. I always teach I teach the snowball method to people that are in bad credit card debt, which means either there's two ways to that. And one way is either you're going to pay off your lowest balances first, or you're going to tackle the card that has the highest interest rate first. And then you're going to go down that way. So and you're going to make sure that you're paying those things off, because that's what's greatly affecting you. So that's the biggest thing, to come up with a plan on how you're going to escape debt. Even if you have student loans, the same thing applies. If you have your bills right now, your monthly bills, your electric, your water bills, the same thing applies. A lot of these companies now, especially during the pandemic, they're offering payment plans for your utilities, where you're able to make monthly payments at a fixed rate on your utilities. So if you need to do that, then guess what? Get on that fixed rate for your utilities, because that means that you're going to pay that exact same amount over 2 years, 12 months, whatever the case may be. And then it frees up more money for you to apply towards the things that are directly affecting your credit, which would be your credit cards, which would be those personal loans that you guys have taken out. So the biggest thing is, what you need to do is you need to come up with a plan.
And this is another question, Ms. Smalls, but if someone is not in debt, what should they get first from their bank, or what should they choose to get from their bank? Should it be the credit card or a debit card?
All right. So if you're not in debt, the biggest thing, the way how companies or lenders track you is through your credit score, your credit profile. So a lot of people are thinking that debit cards are really, really good, but debit cards give you access to cash. You cannot leverage cash unless you have a significantly large amount of it. So if you're your average everyday 9 to 5 worker, and you're consistently going to work and you're earning a paycheck of, let's say, $1,000 a week, that's $4,000 a month, right? So that's not a large sum of money, especially when you have bills that you have to pay. So when you go to your bank, if your scores are not where they need to be, meaning above 620, or let's say 650 and above, then what you want to do is, the first thing that you want to do is you want to establish a great relationship with them, meaning not having any overdraft fees. You want to apply for a secured card. Now, a secured card is going to require you to put your money up front, whether it be $500 or $1,000. It's okay, because what banks have in place now is they have the ability to give you that secured line of credit. They'll give you your money on a credit card, and then after a year of being in good standing with them, meaning that you consistently pay your credit card payments on time, they're going to refund you your money. So now you'll still have your secured card, and then a year later, guess what? You'll also have that same $500 or $1,000 that you gave to them to open up that account. They'll deposit it back into your account. And then some banks will even turn your secured card into an unsecured card.
Yes, ma'am.
So you definitely, yes, you want to get a credit card over a debit card.
And let me ask you another question. This might be a simplistic question. How do you make your money count?
You make your money count by leveraging your credit. And so, and that's how you do it. So I think before, a lot of people were afraid of credit, and it's like, well, have cash. Make sure you pay for everything in cash, because the perception was that you wanted to own everything. Now, the perception now is you still want to own everything, but you want to use other people's money to own it. So you make your money count by getting a Roth IRA. You make your money count by using your credit to purchase Airbnbs, or starting businesses. And then therefore, once you have that cash flow coming back, that revolving line is still there. So it's still there, and it's still available for you to consistently use, but now you're just using it more responsibly. So when you have these businesses or these assets that are in your name or in your business name, now you're okay. So that's how you make your money count. That's you make your money count by leveraging the credit, which is other people's money. Because I can go into a bank right now, and you that are taking your money, right, and you're putting your money in just a traditional savings account. If I go to that same bank and I apply for a line of credit for $50,000, and then that business line of credit is given to me, who do you think they leverage the money to give it to me from? They're using the money that's in your savings account that's federally backed and insured. So even if I default on my personal loan, you didn't earn any interest on your money. However, I took the line of credit that they gave me and I made it work for me. And so I earn interest on the money that you have sitting inside the bank.
Now, Ms. Smalls, obviously, as you know, a lot of people are getting stimulus checks right now from the federal government. And then on top of that, a lot of people are getting their tax refunds. How should they save with those types of monies?
So again, with the stimulus and with your refunds, again, like I said, if you're getting these things, the first thing that you want to tackle first is you want to make sure that you have that emergency fund set aside, because we know unexpected expenses do come up and they do occur. So that would be your first step. The next thing would be to then, if you have children, these are just options that you can use. Is you want to make sure that you have life insurance, right? Because this is a pandemic that we're in. So if you have children, whole life policies are really good. And guess what? Whole life policies gives you capital that's built into it that you can borrow from if necessary later on down the line, once you've put some money into it. And not only that, so therefore, if you decide to take some money out to use it for any investment purposes, then guess what? You've invested, you've earned money on your investment. You can put that money back into the policy. And if there should be any type of death or anything that will come up, you still have your life insurance policy there to cover the expenses. So that aside from insurance, which is another great way to invest, obviously opening up a Roth IRA is a great way to invest. Getting familiar with self-education, right? So getting familiar with real estate, getting familiar with stocks, and understanding how you can make your money work for you. Starting a business is another way as well, on ways that you can identify to make your money work for you, or invest your stimulus so that when 2022 comes around, you're not in a position to say, I'm just waiting on my refund. I'm just waiting on my refund. Now you have more money in the bank. You can, I mean, this is the day and age now where you can make $50,000 within a month's time frame. It's just about if you apply yourself.
Yes, ma'am. And let me ask you this too. How do you appreciate the benefits of saving, having goals, and assessing your finances?
So basically, I appreciate it because it allows me to be able to speak to my children, to be able to teach them the other ways, another way of living, which was contrary to how I grew up. And so I think that is extremely necessary to be able to do those things. And I think now when we have kids, when we have families, and even if you guys are single, your biggest thing is you want to make sure that if you don't have families, that you're leaving an impact. You want to be known when you leave Earth, right? And so in order for that to happen, you have to get serious about where you are financially, and even just to enjoy life. The number one rate or cause of suicide in America is finances. The number one cause for divorces in America is finances. So in order for us to financial freedom, it frees up our time. So it's not just a money thing so that we can ball out or we can look good to everybody else. It gives us the time that we need, that we desire, so that we don't have to punch in and clock in on a job where we're unhappy every day. It gives us the ability to say that, hey, today is Wednesday. You know what? I'm going to book a flight and I'm going to fly out to California. I'm going to book a flight and I'm going to go to New York just for the day. I'm going to go to Miami just for the day. And it's okay. So being responsible with your funds gives you that freedom. And that's what ultimately every person really wants to have.
And, if this particular interview is not enough, how should people get in contact with you?
So I am available on all social media platforms at Anetra Smalls, my first and last name, as well as you can also visit my website, anetrasmalls.com. And that's basically the way to get in contact with me. My DMs are always open, so that's it.
Anetra Smalls, thank you so much for your time. And again, welcome to the award-winning Quintin's Close-Ups.
Thank you for having me.
Oh, you're very welcome.